Ladies and gentlemen, welcome to our Breakout Multiplier event. I am JC Peretz, and I am joined by Mr. Steve Straza, the man of the hour, the man that deserves all the flowers that he is receiving these days. Mr. Steve Straza, how does it feel to be, the mayor these days? Everybody loves you.
That's really kind of you. I'm trying not to let it go to my head. And
Yeah.
I would just say bull markets are more fun, right? So it should be this way. We're having a good time out here.
Listen, I always like to preach, act like you've been there, end zone dancing's not doing anybody any favors. And I got to tell you, Mr. Straza, you are taking all of this success incredibly with a lot of maturity. I'm very, very impressed. Mr. Phil Perlman would probably be very impressed as well to hear that.
You got to make hay while the sun is shining. Bear markets probably aren't this good, so we enjoy it while these times are here. And the truth is, JC, this is the perfect risk-on environment, and we're just entering it. Like, I really believe that. This is just starting now. So,
yeah, no question. Stuff. Small caps just hit new all-time highs for the first time. You're seeing the same thing in the Dow Jones Transportation Average. Finally, consumer discretionary is catching up. That sector rotation is here. All the weakness that you're seeing in technology, the fact that the stock market continues to rip despite all of that, truly is impressive. So the idea... The reason that we're here is because everybody keeps asking, like, they keep seeing this stock went up 10x on this trade, 3x on that trade, just like again and again and again. So what is happening here? And that's what we're here to talk about. Like, what is this strategy that is working so well? And it's not just about that, but it's about understanding that all of this that has been created derives from all of the research that starts with all-star charts. It starts there. And then all of these trades are created in order to multiply the returns that you might see in a common stock trade that could bring 25, 30%. Now we're talking about 300, 500, 1,000% in some cases. That's what we're talking about. Let's go, right?
This is truly a kicker system at the end of the day, and it was really devised many, many years ago to make sure we're doing all of this great research out here, right? And maybe we'll nail a new trend reversal and we'll get long. And you get long the common stock, you make 100%. This system is to make sure that we never look at each other after nailing the analysis on an asset or a stock and say, we should have made more money on that. Breakout Multiplier makes sure that we always make enough money on these trades.
Anybody who's out there, you guys listening, if you guys have been trading for a long time, you understand this. It's not about getting a trade wrong or, losing a little bit of money on a trade. Like, we're all going to do that. We know it's part of the game. It's when we're right. If we don't make enough money when we absolutely nail it, that's the worst thing. That's the worst thing in the world. And if you don't know that yet, take my word for it. But a lot of you out there are listening and you're laughing because you've been there. We've all been there. You got to be there to understand. All right, we're going to talk about the strategy in a moment. Let's talk about the success. We don't need to take this, victory lap again and again. We'll get through it quickly. But talk to the folks about exactly what's transpired here.
So these are real results. We have about 5 months of data now in terms of our track record since we've been doing this summer. And on an average month, this is what you can expect, right? So let's just take it from top to bottom. We put on an average of 9 trades these past 5 months. 55.5% of those trades have doubled. Of those doubles, 66% or 2/3 of them have gone on to triple. Of those triples, another near half of them have gone on to go 5x. Now, with all that upside, about 1.5 of those 9 positions is going to zero, which means we never sold a double. We're taking the full loss on those positions, more or less. The idea here, though, is that we get enough 3, 4, 5, some cases 10x's. They pay for all those losers and more. This is a home run system. We're trying to get those outlier trades, right? And we do, and this shows that. Some months are better than others, but just look at all of the green here. The green segments in these bar charts, which is just a breakdown of our trade results by month, all of the green means that those trades went at least 3x.
At least 3x, and some of those 10x.
Yeah.
Let's talk about. I love a good pie chart. The fact that we can present pie charts, even with results of trading strategies, this really is great. I love that 10x there because those are real standouts. So those make the year.
And there's 2 important things here. This system's built on 2 things, and one thing really. First of all, 15% of the trades that we put on go to zero. They're total losers. Fine. That's a great number. Now, if you add up the 2x plus the 3x plus the 4 or 5x here, that's 55%. So more than half of the trades that we put on, we end up at least taking back our initial capital. Okay. So say your cost basis in a position is $200. When that position doubles, you can sell half of it and take that $200 back. We're doing that more than half the time. What does that mean? We have a free ride, essentially with zero risk, into maybe an earnings event or an election per se, right? And that's where you really get the outliers, right? When we could take our initial capital back and say, this is a free ride. And then it does something to you mentally as a trader too. When you know anything that happens from here, I can't lose. The most I can lose is nothing. You let your winners ride. And that's when you hit those outliers.
Yep, no question. So 45 trades total. So this is a strategy you've been implementing for 7 years now, but publicly with Breakout Multiplier, there have been 45 trades over the last 5 months, 4.5 months.
I could show you my performance from the past 10 years, but we've done this publicly. It's all on the blog, right? And if you look at what we've done, 7 zeros over the course of the past 5 months, while we're selling more than half of our positions for a double. That's a great win rate.
So here we're looking at the number of 2Xs. 26 of the trades have doubled. 16 days is the average day for a double, and the average excess return after a double is another 261%, with 17 of those trades tripling, 8 of them 5Xing, and then, of course, the 10X. And we're going to talk about exactly what happened there on that 10X too, because the beauty of all of this is that it's a repeatable process. It's not, we're not just slinging. And we'll talk about the process now.
And all that means that average excess return, you got to tack on the initial 100 to it. All that means is that our average winning trade makes about 360%. So if you want to assume, even though it's probably not fair to, if you want to assume that the average loser loses 100%, fine. Then the average win rate is 3.6, or the average winner versus loser ratio, right? You got 360% on the average winner, 100% on the average loser. So the stats for the system are really good.
Yeah, that's an absolutely great ratio. And the stats speak for itself. We'll talk about the strategy and the simplicity of the whole thing. But the performance obviously speaks for itself. I like that big stick in the middle, Straza, that one in the block. Those are the big sticks. I mean, just one of those pays for the rest of them and then some.
Yeah, all we did here was we color coded this. This is every trade that we put on, right? In chronological order. So from our earliest trades to our most recent trades. And you get a couple Pelotons a year. Peloton's gone more than 12X for us. I mean, that's really all you need. That pays for, you could have 9 losers in a row. Not that we ever have, but if you get a 12X, that really makes everything better. All we've done here is color coded everything that's gone 9X or more in green. But look, we could have done 7X, and then things like Cinemark on the left, ARC here in the middle, SoundHound would all pop out too. So there's a lot of outliers in the system. And then the yellow here means all we did was sell a double. So no harm, no foul. They weren't even losers. They were we sold the double and got our money back on those.
All right. So most recently, this particular pattern is working out really well. The beauty of it is that, it tailors to the type of market environment we're in. It just so happens these are a lot of the types of trades that have been working. The garbitrage, I believe, is what the kids are calling it these days. These, high growth names that got slaughtered after the 21 peak really coming back, sort of a renaissance for those types of names. This chart really tells that story well.
And one of the beauties of Breakout Multipliers, we can really go anywhere, right, with these trades. And one of the themes that we've really, really leaned into, and this chart explains why, over the past really, a couple of weeks to a couple of months now, is speculative growth, right? We've gone out on the risk spectrum. We're taking on more small caps, higher risk, higher growth companies, the ARCy names here. So this is ARC, Next Generation Internet, versus the NASDAQ 100. What we're saying with this chart is the path of least resistance is now higher. New uptrend on relative terms for ARC stocks relative to the broader market. So we want a lot of exposure to that theme. One way we did it, here was one of the vehicles. Next chart. Check out Peloton. What are we doing here? We are identifying volatility compression. So the indicator in the lower pane helps us do that. We call this the volatility squeeze indicator. When it's near the lower bounds of its range, it tells us volatility is super, super tight here, right? It's super, super constricted. What happens is from compression comes expansion, right? Volatility is mean reverting. So look at this perfect coil in Peloton. Hold on. Look at the perfect coil in Peloton. We enter the trade. We're looking at the volatility squeeze indicator. We're saying this is coming off one of its lowest levels in several years. You could see the little moving average crossover system we put on top of it with the green starting to hook here, right, and curl. If you flip to the next chart, we get in on the coil. The coil breaks out. We sell a double. Just as we're selling that double, our volatility squeeze indicator is crossing over and giving us volatility expansion signal. And then we were able to ride this into earnings risk-free and sell the 10x the day after earnings, more like 12x.
12x trade, unbelievable. And then again, a very similar pattern. An old darling from that 2000 into 21 got absolutely slaughtered. Multi-year base, volatility compression down near the lows from this entire period, right?
Not only that, but we got this one cheap, right? Just as volatility was getting crushed, we bought it the day it reported earnings. So the morning after, as the stock was reacting to its earnings report. Okay, what is the bet that we made here? Volatility is compressed, right? We see this super tight coil here. The base hasn't even completed, but we've seen so many other completed bases that started out looking the way Square did in this chart. We said this is probably going to build out that right shoulder and head back to the upper bounds of its base. Let's get in ahead of that, right? So we get in following earnings. We've got a great price on these calls. Bang, we sell the double a couple days later, actually a day and a half later. And then look what we got after this. So now we're deep in the money. We can let it ride. We have zero risk left in this trade, and we get the base breakout. We reclaim that VWAP from the old all-time highs. This is a perfect pattern. We have zero risk, and we can now let this ride, and that's exactly what we intend on doing. Right now, the calls that we paid $180 for less than a month ago, 2 weeks ago, are worth $16.50.
These are yeah. These trades are specifically why the system was created, right? If we're going to nail something and we're going to get something right, we better make enough money to justify our time on why we're even doing this, right? And that's exactly what this is. And what I love about it, probably the best part, I mean, the results are fantastic, yes. But what's even better than that is the repeatable process. It's not, hey, how did we wake up in the morning? We should buy energy stocks today. No. That's not how it works. So the first thing, again, just to be clear, this is where I get to toot my own horn, Mr. Straza, as the founder of All Star Charts. The trades start here. And to be fair, Straza has been incredibly instrumental in the analysis done at All Star Charts for many years as well, so I won't take all the credit. But we're starting on third base. Yeah. Any of the ideas that are potentially put on in the trade are trade ideas that are coming out from the research that's already being done. So we're already starting out, like I like to say, on third base. Where are the best risk versus reward ratios? What opportunities from the long side or the short side are closest to best entry points? Like, we're already there. These are all trades that are in range on the Rangefinder app for premium members of All Star Charts. These are trades, common stocks, ETFs. They're already in there. But then here's the thing. What do we know about the stock market? We know that stocks trend, asset prices trend. We know it's an anomaly in the market. We know that for a fact. What we also know is that volatility mean reverts. We also know, right? It's another market anomaly that is fact, right? So from volatility compression comes volatility expansion. So if we have the ability to find stocks that we want to own, and volatility is incredibly compressed, like you saw on the block, like you saw in the Peloton, we're making a bet that volatility is going to expand, and we're getting paid on that volatility expansion. That's the idea. And then we've talked about this before, very simply. Then we're looking for the 25 delta calls 45 to 90 days out. Very simple. And again, I like to make sure that everybody understands exactly what we're doing. But at the end of the day, all of these are detailed. Hey, we're buying this call option, and this is the expiration at this strike. This is the price that we're paying. This is where we want to sell a double. Like, all of that is perfectly outlined. But Steve, I think it's important for everybody to understand that that is the repeatable process that is done every single time.
So think about it this way. Here's what my day-to-day is like when it comes to the Breakout Multiplier. We do a ton of research here, right? We're covering a lot of stocks. Our entire coverage universe gets sent through our compression scan, right? And we're being alerted all day throughout the day of the stocks that we're already interested in that are popping up on our volatility compression scan. Then we're looking at the charts, we're digging through, we're checking if there's earnings or some sort of catalyst event coming up, and then we're putting the trades on. So we're constantly being alerted. Hey, look at this tight volatility setup. Look at this tight volatility setup. And we can go anywhere with this system because it's all the stocks that we cover. So this is what our table looks like. It's really where we're starting from. This feeds out of rangefinder, tells us which ones are tight. Then we go to the charts and we look at the options chains from there.
All right. So one of the things that I love about this system is that it's not just energy stocks or just gold stocks or just technology stocks. It really is no discrimination whatsoever. Everybody's allowed in. So let's talk about this. We're looking at the Trump predicted data right before the election and the prices of regional banks. So already standing out. This is a theme that we've been talking about. Look at this big 6 bank index. So these are an equally weighted index of the largest 6 banks in America, completing a base, making new all-time highs. Look at banks breaking out to new highs on a relative basis. So there's a big theme here in banks. So of course, Mr. Steve Straza, you want to walk us through here on what's happening in the B of A?
Well, not long ago, all of the talk around markets was, what is the election trade, right? What is the election trade? And we were pretty confident that it was banks. There was banks, and then there was everything else. But what are you going to do? Are you just going to buy common stock in JP Morgan and you get some massive move higher in the banks like we did right after the election? I think the regional bank index was up 10% that day in a single session. So we're saying, how do we add juice to this theme and make as much money as we can in the event that we're right? Banks are the election trade, and we get a monster move. We go to Bank of America, a highly liquid vehicle. We have this little triangle formation. If you were to zoom in even more, it was a pretty high and tight coil within that triangle formation. We said this is perfect. The volatility squeeze indicator was agreeing that this was a perfect setup. We get in, we sell half the very next day. Or I'm sorry, we sell half the very next week, right? So we're out, we sell the double, and then bang, next chart. Calls are worth $2, 5x, just, I don't know, 2 weeks after that, right? So this also speaks to that quickness in the days to double. In this case, the days to double was about 7, right? It only took about a week to sell the double, free ride. We're in something, a bullish vehicle, and we are basically able to exploit that election ripper that we saw.
Talk to the best traders in the business. They'll tell you their best trades ever started working right away. So this is no different. So we went from technology to consumer products and Peloton to banks. Now we're looking at Bitcoin. Bitcoin's breaking out to new all-time highs. Huge base, obviously, at all-star charts. We're all over it. And you're seeing a trade in Marathon at this point. Same thing, right?
Look at this coil, right? We've been betting that tops fail this entire cycle. This has been one of our favorite patterns, the fail top, especially coming out of a nice base like Mara was, if you saw the left-hand side of the screen here. So volatility squeeze indicator turning higher off of an extreme low. We're in this nice little rectangle pattern. We're tight here. We're coming out of it. We get long the $12, $20, $25 calls. And 3 days later, we're selling half. Selling half at a double, really almost a triple for 330. Hard retest. We don't care. We're hanging on. We're not getting scared out of this trade. We can't lose, right? Hard retest, rebounds off support. Those calls went on to be worth 650.
And had you not sold half on that rally, you may not have hung on that entire time. So from a psychological perspective, like Steve was saying before, that makes a lot of sense. Here, same thing. Volatility compression in that riot platforms, no different than the Mara.
Failing a top, hooking higher. We get long the 1122s. We didn't go out as far as we normally do here. These were expensive calls. That's okay. We could get into them again the next week if we still like the trade. In this case, it worked out pretty quickly. It took about 2 weeks to get the double. Bang, we sell the half on the double, and then we let it ride. And look at the calls reached a peak of $4. So you could have closed that trade for close to a 9 or 10x. Not expecting anybody to pick the top in these trends, but the idea is that selling that double gives us the liberty to not worry about our remaining position. And then in certain cases, you'll get some big runners, and that will be your outlier trades.
This was a great one. This was early on in the launch of Breakout Multiplier. This was Cinemark, same exact thing, right? You know, it's the same process, right? It's already a buy in rangefinder for whatever reason. Could be in the small cap scan or the Hall of Famer scan or the high short interest. Somehow it makes it on there. By the time it's on here, it doesn't matter anymore. We're just looking for an opportunity. Cinemark early on in that.
But a lot to like about this. This is why it's in our scan in the first place, right? This is why it's in our coverage universe, breaking out of a nice little multi-month base here, right? We know that the path of least resistance is higher for this name. Now in a little corrective phase, which is actually really high and tight, shown with the second green arc. Volatility compresses back down to an extreme low. We see that, we say, okay, this one probably resolves higher in the direction of the underlying trend. We're going to get some volatility expansion here. Let's make the bet that that volatility expansion comes in the form of upside momentum. Before you know it took 5 days. We sell the double. We got a free ride, and take a look at what happened after that.
Absolute monster. And this is what we're looking for, right? In a perfect world, this happens every time, but we know for a fact the world we live in, it does not. Straza, walk us through what happens when we are not correct. Because the only reason I'm comfortable doing this is because we have a finite amount of risk that we could possibly take. We can't lose more than what we put in. We know that. Yeah. I love that.
And that allows us to take shots that we sometimes probably wouldn't take with common stock, right? Knowing that we could define a risk and we can only lose as much as we paid for the calls. We'll get into stuff that's in a downtrend. Nat gas is a great example of that. Sometimes you get these massive counter trend rallies off of, inflection point lows. We thought we had that in nat gas. We took a shot. We sold the double. Then we say free ride, no harm, no foul. In the case that we're wrong, it ended up kind of sputtering out here. But the idea is we were able to give ourselves free commodity exposure in the case that nat gas did do what it does so often, which is absolutely rip to the upside. This could have been a big trade for us. We did something similar with silver too, right? So we can add this kind of commodity exposure. We see silver breaking out of this nice base. We say, okay, let's get some exposure here. We take on a high risk vehicle like First Majestic, right? So we get long the 11-1-750 calls, super cheap, coming out with a nice high and tight coil here. You got VWAP resistance that's being reclaimed from the Q1 highs. Bang, this pops really quickly. It doesn't take long to sell the double with these. All right, so we're able to sell half, free ride. So we were able to do that with both silver and nat gas. Even though they turned into losers, we had exposure to those trends.
Yeah, I mean, again, if in a worst case scenario, you can't lose more than you invest, but the idea behind selling the double on an initial pop, and now you can't lose anything, even if it goes to zero, even your initial investment has been returned. I really like the risk reward aspect of that when entering into the market. And of course, what we're looking for at the end of the day is a Peloton. This is the trade that went up 12x, nice little coil. I mean, this is the benchmark trade that we're looking for that really makes our year. Sell half, let the rest run, and really let this ride. So, folks, we gave Straza his flowers. This has really been the most successful strategy that we've ever implemented in the history of the firm. I mean, that's really true. So members of Breakout Multiplier get these trades every single week. As you saw, 9 to 10 trades per month. You saw the stats. And then now that we have Black Friday, right? So we're going to have a Black Friday week here on Thanksgiving week. This is my favorite holiday of the entire year. Steve Straza, my friends, is giving a 4-week mastermind on exactly how to implement the Breakout Multiplier strategy, how he does it, how he finds the trades, how you can find your own using the Breakout Multiplier strategy. This has never been seen anywhere in the history of the internet, Mr. Steve Straza with a 4-week mastermind that I'm not allowed to be in. I could be a guest, but I'm not allowed to be there interrupting him. You are getting unleashed, unedited version of Steve Straza here, which I cannot wait myself. And of course, the access to the Rangefinder app, which we talked about, where Steve is going to show you exactly how he uses it, how you can use it as a member of Breakout Multiplier, and how you can create your own trades and get creative, because that's really what it's all about. Because Steve Straza also gets creative behind the scenes and is going to show you some of the little tricks that you can add, some of the twists to the Breakout Multiplier subscription. This Breakout Multiplier Pro, only members of Breakout Multiplier Pro get access to this mastermind. Not everybody, Mr. Straza.
And the truth is, this is something I am wildly passionate about. This is my baby. I've spent the last 10 years of my life perfecting the system so that you don't have to. And now we're finally bringing it to the world, and I couldn't be more proud of it, really. So we get on these calls once a week. We talk about it. We talk about all the different strategies, how you can manage your way out of your remaining half, stuff like that. Everybody comes. We do a big Q&A at the end of every session. The mastermind is going to be great because there are certain nuances to the system. The truth about this system is it's made all of the difference for my personal investing. It's been the sleeve that makes a difference every time I have a major week, a major month, a major year. It's because of the Breakout Multiplier outlier trades.
So quarterly, $7.95, annually, for 29.95 before prices go up permanently. Steve the other day tells me, JC, we're really doing well. I think we should probably raise prices. I'm like, I know we are. After Thanksgiving, we're going to raise prices. So this, guys, you locked in the prices, $7.95 for the quarter, $29.95 for the year for Breakout Multiplier, getting all of the trades throughout the week, about 9 to 10 per month, as well as the weekly live strategy session. As Steve said, it's one of his favorite things to do. Is interact with everybody. We're going to do that right now. As a matter of fact, we're actually going to take a few questions. Yeah. Spencer chiming in here with some questions. We're going to get into the. We're going to answer this question, of course, Mr. Steve Straza on how to incorporate the Breakout Multiplier strategy. But can you give the folks, Steve, a little bit of insight as to what you're going to discuss in this mastermind with respects to post selling the double? After you sell the double, how do you manage that? Can you give a little bit of a heads up as to what you're going to talk about?
The truth is that everybody's different, right? So we will talk about ideas and certain ways that you could do it. You could use pivot lows. You could use trailing stops. I like to anchor VWAPs from breakout levels, right? And really trail things tight. But the idea is that we sell the double to give ourselves the liberty to not worry about the remaining half. And a lot of times, it's when I'm not paying attention or we're traveling for business and I got a remaining half of a position that I'm not even paying attention to. And I let it run and some sort of news comes through or they beat earnings or there's an election or something like that. And you get a 20% move higher and you say, oh my God, this trade's a 15X now. I had totally forgot about it. That's what we want to do. We want to put ourselves in a position to hit these home runs over and over and over again. And selling the double allows us to do that. So when we get on these calls, I say, hey guys, if we break this pivot low here today, I have enough exposure to the speculative growth theme right now. I'm probably going to close out my remaining half. But I don't come on and say, hey, we're closing out the remaining half here. I say, we could do it this way. We could do it that way. If you like this exposure, we're deep in the money. So you could really hang on. You could roll calls. There's all sorts of different things that we could do. So it does get a little bit more complex when it comes to selling the double. But if you get there, it's a good problem to have.
Yeah. And that's what really it comes down to your personality and what you're trying to do. Yeah. And this is, we're going to go over all of these strategies, or Steve Straza specifically here in week 3, on how you can manage your own breakout multiplier trades. What's really interesting is that, of the three of us, myself, Steve Straza, Sean, the three of us will agree on a particular trade, an idea, and the three of us will execute it in 3 completely different ways. Because even though we're so close and we talk every day, we still have different objectives and strategies that we're running. And that's really what it's all about. So Steve does a really nice job of talking about what he's personally doing, but at the same time being like, if you don't want to do that, these are a couple of other options that you can do. You could use a trailing stop. You could use that anchored VWAP. You could roll that call for another month if you want to hang on to it, right? I love the fact that, that's just something we learned from Sean, is that options give us options, you see.
They really do. And selling doubles give you a lot of options too.
All right, so we have another question on the actual execution. So this is step 3, right? So step 1 is finding the trades on the rangefinder app that are already there, right? And that's what this looks like here. And then running it through that volatility compression scan in order to start looking for opportunities. And that's really what it's all about. So the question is the execution part. That's step 3. Yep. That's step 3. Why the 25 delta? And is it always exactly 25 delta, Steve?
It's almost never exactly 25 delta, right? But we'll find the closest strike to the 25 delta. And the reason for that is simple. The 25 delta over the years has proven to us that that is the strike that, in the case that we're right about the little coil that we're trying to play a resolution of, that by the time we get the reaction move out of the coil, in the case that we're right, we nailed the direction on the coil, the stock starts moving in our direction, it typically gets into the money by the time that that reaction move is done. Then what that does for us is it allows us to hold on to the trade longer, because if we're in the money, we don't have to worry about theta decay. And then we can let the trade run for an extra 30 days. Otherwise, if we're not in the money and we enter that 30-day theta decay window, we're either looking to close or roll and starting to treat the position like a loser, right? So ideally, we get the pop we want, we sell the double, we're in the money, and then we can just let it ride for the duration of the calls.
And then as far as the 45 to 90 days out, that's that sweet spot. That's that window.
That's because the time frame for these patterns that we are getting behind tends to be 2 weeks to 2 months, right? You want to give them a couple weeks to a couple months to work before that theta decay kicks in. And we'll pick, different expirations based on different patterns. If we're high and tight in a week and a half, 2 week coil, we might say, hey, 45 days is enough. We probably get that pop and get that move over the course of the next 2 weeks. We don't have to pay up to go out an extra month or month and a half.
All right, folks. So this is the Breakout Multiplier Pro, comes with rangefinder, with our Black Friday special. Quarterly plan $795, the annual plan $29.95 here for Breakout Multiplier. And guys, I think we should take one more question. Make sure to click the link below. Shoot us an email. Shoot Straza an email. Say hello. But we'll take one more. Mr. Steve Straza, can you walk the members through what can they receive on a weekly basis, right? As a new member, signing up here right around Thanksgiving, like what over the next week, what does that look like for me?
It's probably going to be at least, one trade post a week. Sometimes there's 2, sometimes there's 4 or 5, right? We don't hold ourselves to, hey, we're putting out a trade every Monday, Wednesday, and Friday. No, as they pop up and they're actionable and it's time to get in, we get in. We might put on 4 trades in a day and then none for the next week and a half, right? So there will typically be some new trade idea posts in there. There will be some trade management posts in there where we'll send you our portfolio tracker and I'll talk about what I'm doing, how I'm managing out of my positions, what are some other ideas for managing out of the positions. And then we do a weekly call, which is really the best, every Thursday, where I talk about all the open positions, maybe anything new that we just put on, how I'm how I'm closing out of the remaining halves of those positions. And then we open it up for Q&A. And we all just kind of learn together, right? And we shoot different questions around. I talk about, hey, you could handle this situation this way. Oh, what do you think about these stocks? Why do we get into this? And we really talk through the system. So we all learn and grow together. And that's a lot of fun. And I think it's the most valuable thing that we do as well.
Great. Nice job. And I appreciate you doing this, Mr. Straza. Folks, click the link below. Join Breakout Multiplier. Get the trades throughout the week. Of course, the 4-week mastermind that's about to start in 2 weeks. Of course, access to the Rangefinder app, which is fantastic. Certainly makes our lives much easier to be able to track all of these things. And the weekly strategy session that Mr. Straza was just describing. I mean, it really is a huge value add, particularly on the Q&A side. I really like that a lot. So $795 for the quarter, $29.95 for the year. Folks, you could be anywhere in the world, but you were here with us trying to learn and get better. And kudos for that. And we appreciate you. Thanks,
this system's the perfect bull market sleeve. Shoot us a note if you guys have any questions about it.
The perfect bull market sleeve. I like that. All right, guys. Adios.
Bye.